Well, good evening. It's Monday, the 24th. Okay, February 24th, 2025. How about that? Well, it's my pleasure to bring to you this information, super valuable information, crazy valuable information, because what I'm doing here is I'm providing you a direct window into the world of residential real estate as it pertains to Houston. Okay, so let me go ahead and change this view so that it is full screen here. Let's see, full screen. There we go. And let me tell you what we're looking at. So we're looking at an updated dashboard. All right, this is my newest version of the dashboard. It's Real Estate Analytics. This is unprecedented. Okay, this is breaking down sales of, looks like over the last 6 months. We got 180 days of sales. We actually go back to 2019 sales data here, but we're looking at the last 180 out of that entire data set because that's the most relevant time frame. So we're looking at the last 180 days. Excuse me. Let me put my phone on silent here so we're not getting random notifications during the video. So the last 6 months, there was 35,785 closings. So if you put that in perspective over the course of a year for the Houston market area, as you can see down here, this whole region, it's 11 counties that make up Houston. That's 70,000 to 100,000 per year, because as soon as we enter into the summer season, the number of sales is going to drastically go up. It's going to be more like 50,000. Okay, so we're in the cold season. We're actually passing through the cold season right now. So the volume drops off, most definitely does that. In fact, I can show you proof of that when we hit this time series. So, you know, proof is in the pudding, and the pudding is the numbers. And we see here that we look at this bottom chart that this is by quarter since 2019. As I told you, 2019 is where this data starts. I wanted to make sure that we have a holistic picture looking back to 2019. So looking back prior to COVID. So we see what that year of pre-COVID looked like, 2019, and then how COVID impacted us, and overall just seeing the big picture of COVID and the economic ups and downs and woes of the economy that we've been experiencing with COVID-19 and with higher interest rates, with storms. We've had storms that have come into Houston, which have caused houses to flood, caused homes to have pipe bursts due to the freeze of 2021. And so many things have caused the market to sway different directions because of weather events and because of economic factors. So things that are really outside the realm of what buyers and sellers can control. So we can see clearly with this kind of camelback looking trend in the volume chart down here that we have a summertime. As you can see, the volume increases. This is in units and in sales. And we see that in quarter 2 and quarter 3, we've got this bump. And then it troughs out in quarter 1. So quarter 2, quarter 1, quarter 4, right around that time. So we got a summer boost and then a winter trough, and a summer boost, winter trough. And we see that the troughs and the boosts, or the crests, you might call them, crests and troughs, they were rising up until 2022 when interest rates started to take control. Now, here there was a consolidation of pricing. So we were in the 2021 timeframe. There was a consolidation, and then interest rates took over and caused, we still have the troughs and the crest and troughs of the market, as you can see, but they are fairly flat. They're not really trending down so much, like slightly, but pretty flat. So you're not going to walk into Houston. I just want to point this out. You're not going to walk into Houston, whether you're coming from Chicago, California, New York City, Colorado, or wherever it is you're coming from, or even from interstate, Austin or Dallas or somewhere like that. But you're not going to come into Houston and catch a great deal, because the prices, as you can see up here, have flattened out, right? So we have the volume trending up, volume consolidates right around the time frame of the highest peak of the sell prices. So when those sell prices were peaking, and that was at $357,000, that's Houston wide, and only in 2019 it was $236,000. So within a short time from 2019 to 2022, so 3 years, the values went from 236,000 to 357,000 market value. So we see at the highest price point, the volume consolidated, and then we are seeing a similar up and down movement in the pricing. So what does that tell us right now? Well, that tells us that prices come down in the wintertime and they rise in the summertime. And why does that happen? Well, volume goes up. Volume goes up, so there's more purchasing, there's more buyers. So Houston is seasonal. Plain to see. Houston is seasonal. You can see it right there. It's hard to tell when there is a lot of price getting just pushed up. You can't really see it as much. In volume, it shows better. But pricing doesn't give you the whole picture, and that's why we have that volume right below it. So this is very useful. So by the way, if you're a realtor, I am licensing this out for realtors to use. This is proprietary sales data, y'all. Proprietary sales data that you cannot, just anybody can use. Some of y'all are investors, but if you're not licensed, you're not supposed to use this, but we can let you use it through a buyer representation agreement with my team. So just know, if you are an investor not licensed, that's my workaround, so that way you can use it. If you're an agent and you want to apply this in your team as a team leader, as a broker, for meetings, for consultations, for those types of things, then you may do so, and I have a plan for that. So I'm licensing them out, and it's $100 a month, and it's limited to 200 licenses. So just throwing that out there so you know what to expect on that. And if you are an investor, it's 150. It's a little bit more. It's 150, but again, you have to have a buyer rep agreement. That is the caveat, but your buyer rep agreement is with me, so I think that's a fair deal. It's a good deal. You're in great hands with me. So, but this is amazing. So we get the full picture from 2019 to today on what's happening. I'm going to close that. And what we're looking at here, and this is the debut of the new dashboard, so I'm just going to give you a quick lay of the land, and then we're going to look right into some numbers. We're going to look at some houses, get right into it. But at some things that haven't changed, you have the ribbon on top, the blue bar on top. That's been there generally the same over the course of the last couple of years that I've had this dashboard up and running. So I've been using it since early 2022. Here we are in 2025, so going on 3 years now that this has been implemented in my practice and put to use. And so every month, every quarter that's passed by has allowed me to improve on this system. So we've got the summarization on top. That blue ribbon is a median summary. It's based on median numbers. 35,785 sales, as we can see there. Those are closings. 35,785 families or individuals, home buyers, came in, went through the loan process or did cash situation and decided, I'm going to transact a home here in Houston and I'm going to buy a home. Median sale price that they purchased, $335,000. And that chart that I just showed you is a representation of the entire market. That 35,785 sales, where it was in 2019 to where it is now, that is representation. Currently, we're at $335,000. And you see that that's lower than what it was in 2022 at its peak, which was $357,000. Now, we're still in the cold season, so we'll have to see where that number actually goes in the summertime, second quarter, which is what that 357 represents. Per square foot is 163. Now I have a couple other things here. We have median sell price 335. We also have a median list price, so which is higher. It's just about $370,000, and that's telling us that sellers are confident enough in this market. They're confident enough to list higher than what homes are actually selling for. So seller confidence is generally higher. That's what that tells me, right? And it doesn't look like anybody's trying to fire sale. I mean, maybe there are, but we're talking about a consensus across 28,423 actives. And by the way, we are gauging the market off of single family type home. Right here, single family type. We have other types. We've got lots, we've got country homes, we've got high-rise multifamily, private per seller, so not even available for people to see. Townhouses, okay, townhouse condos, all right. But those make up such a small percentage of the market each that we just go straight to single family. Single family is the, I don't know, 80% of the market, 85% of the market. So we use single family to gauge the market condition because of that. So sticking to single family, this is the condition of it. 48 days to go under contract for a property, okay? 48 days to go under contract. So that's from the time of going active to getting in contract and going pending. It's 48 days. Here we have 76 days active. So that is looking at the 28,000 actives down here and telling us that those are on the market for 76 days. And clearly, what causes homes to stay on the market? Three main things: price, condition, location, okay? And here we're seeing that homes are being overpriced due to seller confidence being up generally. So they're asking 370, but they're actually getting 335, big difference. So that's causing the homes to stay on the market longer, 76 days. But for what is priced correctly, what sells, doesn't take that long, 48 days to go into contract. So that's the 35,000 closing. So the homes that do sell, the homes that close on a consensus take less time than overpriced homes. We see that. So you got to watch it. You can't just put a house on the market and list it too high. But people are doing that. So the numbers show it. The next one we see is 2,111 square feet is the median home size. So that is generally what people are buying when they come to Houston and buy a home. So that's what's fitting the mold of a buyer right now. Slightly more than 2,000 square foot. So if you get a house below 2,000 square foot, it's not a bad thing, but it's not Houston-wide market desirable, okay? And if you want to have the biggest market share of your property to be the most attractive to the largest amount of largest pool of buyers, then it should be around 2,100 square feet. Seems to be big enough to give enough room for the average buyer of Houston, but then small enough to fit like a glove, right? So it's like right in the middle, 2,100 square foot. So you want to stick with that. Now, lot size. This is your median lot size for these sales, 7,560 square foot. So this is the lot size that fits like a glove in Houston. Okay, people do like large lots because they want to throw a pool in, they want to have an outdoor grill. But in reality, Houston obviously is not the Hamptons, and it's not it's not Napa, California. You know, it's routine, rudimentary homes that have just gained in value a lot, right? So people find that they want a backyard, but a larger lot means more maintenance, more mowing the lawn, um, probably higher taxes. You can say for sure. So 7,560 square foot lot size is the mold that people desire coming to Houston. So we want to see that. We want to know what is the profile of what sells in Houston, so we can capture something, whether it's Northwest or Southwest or Central Houston, that can capture the biggest audience. You want to buy the house that people want, generally speaking. So when it's time to sell, you have confidence in your remodel efforts. You have confidence that you're going to be able to sell the house. You'll have the most buyers, right? So we need to know that stuff. Okay, so now the year of 2010 is the median year of construction. And this ticks up 1 year at a time. So homes are getting newer, but that makes sense because we adding newer homes all around Houston. So 2010 is what we're looking at for the median year of what buyers are purchasing. Year over year sale prices have increased, not by a lot. So we're looking here 0.9%. So it's not quite flat. It's about 1% higher than it was last year. So we want to take the last 180 days and compare it to the previous year. So this 335 median sale price compared to the previous year's median sale price, it's about a 1%, close to 1% difference. On the positive side, it's gone up. We have some other numbers in here, like rent increases. Year over year rent increases are 2.6%. Okay. We have a price retention figure. So that tells us how much of the list price is actually retained. And right now we're seeing that sellers are willing to give up about 4%. So they're willing to mark up their house, $370,000. They're willing to mark up their house with the expectation to reduce price by about 4%. So that's what they're doing. But see, yeah, they're willing to negotiate. They're going to start a high price and negotiate, but that's what's causing it to take longer to sell. Because negotiation ain't like in one day. You got, a badminton effect for a few days. And then it might not go anywhere. And so you got to wait for the next one. And, so it takes a little longer right now. And we've got a risk of 113%. And that's just describing based on the standard deviation of sale prices, a standard deviation. So we got, you're going to have deviation of sale prices from cheap sale prices to high sale prices. That's normal, right? Especially when we're looking at Houston, 35,000 sales. So you're going to have a huge distribution of sales. And within that distribution is the average. And there's a standard deviation. What is standardized on the deviation of sale prices up and down, expensive to cheap? So a standard deviation gives us a measure of risk. How much does the sale prices vary around the average? And so if risk was 0%, for example, then that would mean that all sale prices are the exact same. And we know that can't be the case. We know that they deviate. So it goes 1%, 2%, 3%, 4%, 5%, 10%, 20%, 30%, 80%. In this case, all of Houston, 113%, which tells me that the overall market deviates by over 100% of the sale price. So we're looking at like a 350K deviation, which obviously is extremely risky. And you don't want to just go into Houston and buy a house not knowing what you're doing. Because it is too easy, guys, to buy a house for the wrong value. It's too easy to pay too much for a home. Too easy. And we already see that sellers are trying to ask too much. We see it right here, right in front of us. By as much as what? $35,000. That's a $35,000 over asking for Houston in general. Do you want to pay over ask by $35,000? And that's just in Houston. What about in Maryland? What about in Atascocita? What about in Cypress, Katy, Cinco Ranch, Woodlands, or even out in Conroe, Montgomery, south to Pearland, Galveston? You do not want to pay not even $5,000 too much because, yeah, the bank is financing the sell price. Yes, okay. But when it's time to sell, that's when that number really makes an impact, that $5,000. And not only that, but by the time you have paid the mortgage off, that $5,000 doubled or tripled. Now it's $15,000. So it's extremely costly, even if it's just $5,000, even if it's just $1,000, that it makes more sense to just save that money or even do better. Get on the plus side, get in an equity position. And we have figures for that, equity and market upside. So we're able to identify properties quickly, fast, that have upside and equity, which will benefit your approach, benefit you buying that house. You will know, I can pay full price for that. And actually, the best house you can buy is one you can pay full price for because it's already priced to sell. You don't have to argue with them. You don't got to play around with them. You just give them their price comfortably because you got the numbers and you know you're getting a good deal. They don't know it. You know, every buyer is different. I'm sorry, every seller is different. Every seller is different. Every seller is different and the listing agent's different. A lot of times the listing agent is just like the brother of the cousin of the whoever that doesn't do analytics and they're just listing the house for sale. So there's opportunities. There's lots of opportunities. The real estate market, guys, y'all, the real estate market, whether it's Houston or San Francisco or New York or wherever it is, the Houston real estate market especially is extremely inefficient. Inefficient. That's key, guys. It's inefficient. What makes it inefficient? What takes 6 months to get a market? 6 months. Why are we looking at 6 months? I do have a 3-month ticker here. But it's a 6-month market. That's how you can figure out what the market's doing, what it's saying, so that way you can make your moves. But you got to wait 6 months. Okay? It's not like eBay where you can just go on and see, 1,000 sales for a red hat. And then okay, red hat goes for $5, right? That's easy. But there's so much deviation. There's so much inefficiency. It's not like the stock market. There's millions of trades a day on Apple, and you know exactly what Apple's worth at a given moment. You're not going to do like 180 days on Apple to make a decision. You're going to look at it, what's it worth right now, and buy it. It's exactly what you do. But to get comps, we got to look back 6 months. And if we've got to look back 6 months, that means there's a huge inefficiency. And some people just cannot wait 6 months to sell a house. They can't wait. They need it sold, tomorrow or even yesterday. So there are fire sales, and there are sales where people are just asking way too much because they did amazing work to it, and they think the house is a palace. So they're going to over ask, and you're going to fall in love with it. And then you're going to overpay for it. But not with me. Not with me. And hopefully not with your realtor if they decide to sign up and start using this, because this will really equip them. And I train the realtors. I'll train the realtors. So remember, limited 200 licenses, So jump onto it for sure. Okay, what are we looking at next? We went from risk to exposure. Exposure is positive 9.2%. That's just a measure to tell you how overpriced, like how much these listing agents are asking compared to what's selling. All right, so that means you are exposed to the variation or the risk of the market already naturally without any guidance, just walking into it by 9.2%. And that's large. We want zero or negative exposure is great. That's what we want. Positive 9.2% is wild. It's too much. Pending rate is 25.2%. So that's actually strong. Not that strong, but it's strong, generally strong. It was in January, actually December, I should say. I should move back a little bit, a couple months. That pending rate was just above like 21%. So only a couple months ago, the pending rate was 1 out of 5 available for sale was under a contract. Now, 1 out of 4 is under a contract. Pending rate's extremely important as we dice through and find deals and look at the market, different markets, subcategories. Because that tells you the buyer sentiment. This buyer sentiment right now for that submarket or that subcategory of a market, what buyers feel about it. Are they scooping up houses? Are they buying them, right? And you want to know that. You want to know that because if you know that, you can decide, okay, well, pending rate's strong. 3 out of 4 is under contract. I probably better move on this house. If I like it, checks my boxes. The market's largely inefficient. And I'm about to show you something else, something called list rate, which is extremely important. Actually, it's down here. It's called list rate. And it's extremely important because it's going to tell you how often something comes on the market in that area. So if you like that area, you see something that fits your needs, and it's priced reasonably, even if it's a tad high, we can always work on that. But if the list rate's really low, you'll know how often a chance comes up. I mean, you could be sitting on the sidelines for years. I'm not even kidding. Y'all, I do open houses every weekend. Every weekend I do open houses, and I'll probably even start posting them online, just on my website, Realetix.com, just so you can see where my open houses are at if you want to drop in and meet me, because I'd love to meet you for sure. So that's a great way. That's a good impromptu to just drop by, see an awesome house, and meet me. That'd be awesome. So I'll start posting my open houses so you can know where to find me on the weekends. And then I also have a page on Realetix where I do curated deals, and that come from these videos. So I find some really good deals from this search, and I'm going to post it onto my website, which is realetix.com/deals. Realetix.com/deals. Pretty straightforward. Okay, so let's look at that. So now we got the pending rate. So we went to inventory is 4.27 months inventory. At 4.27 months inventory, that means it would take a little over 4 months to sell out of the 28,423 actives that are on the market right now. That's based on the sale volume, which is 35,000 sales in 6 months. So if we're looking at a 6-month market, y'all, a 6-month market, and the inventory says we got 4 months of inventory, it means we're on a low inventory market condition, low inventory. It's actually kind of high. I think, just from my experience, that anything north of 3 months is generally high. Anything under 3 months is generally low. My threshold is tighter. I just have higher standards, I guess. I don't know. But 3 months or higher for me, in my experience, not like, this is regional, hyper regional, by the way, Houston. 3 months or more. So I feel like with 4.27 months of inventory, generally overall Houston is more of a buyer market condition. And with only 1 out of 4 under contract, that's also a buyer market condition. So you got 1 buyer scooping up a house and 3 staying on the market. That's not good for sellers. It should be at least 50%, okay? We're not seeing that right now. So when we've got high inventory above 3 months, we've got low pending rate of 1 out of 4, and then we still have sellers trying to ask high prices, not really living in reality, and then they get dealt a reality check, and they have to, 48 days in the market, they're like, okay, I'm going to negotiate now. 96%, I'll take it. That's what they're doing. And so they're getting aggressive. They're still getting more than what they paid last year, 0.9%, but fairly flat, so they're not really making anything. So that's the condition right now. We also tracking flood zones right down here. You see that? So we have a whole list, 28,423 actives in this list. Scroll to the right, we see all the information, which is really great. And here we have flood area, the flood area column, 1% chance per year, floodway. You see that? So this property is in the 100-year floodplain floodway, which floodway means it's a standardized by the city area that will take on water. You do not want to buy a house in that region. You do not want to. It's too risky. Yeah, you're going to come across one, and it's going to look like a good deal because it's priced so well. And you'll be like, I could definitely buy that house, and it looks amazing. That's because it flooded, and they remodeled the hell out of it, and it's probably been on the market 100 days, and you're like, I can buy that. No, I'm not going to let you buy that. Okay, I'm not going to let you. I'm going to say, forget it. Forget it. Okay, that's what I'm going to do. Now, we have some that say none, and that's because they fall outside of the area of which I have collected flood zone indicators. They're typically rural, like Lake Livingston area, or like just way out there, not within an hour. They're pretty far out. So, and then here's something that's really cool, right? So, I mean, this is all new stuff, and this is amazing stuff. But we have these two indicator columns here. So each listing, as you can see, we have listings here, and each listing is rated. If it has an arbitrage position, which is like equity, right? Like underpriced, basically. Like that just means the house property is just underpriced for the region. And then the deal column tells us if the house is generally a good deal opportunity. So a house can still be priced high. So I want to make sure you understand that equity is really the best indicator of a good deal. But then there's deal, and that one is saying, because you can get a high-priced home, but maybe not overpriced home. And then that high-priced home is priced high because it's decked out to the nines, but it's still priced reasonably. It's just high reasonably. And so this column tells us where those houses are at. Because you might not want an arbitrage equity type of house. That's, like you could find, it could be possible. There's diamond in the rough that shows up and it's got an arbitrage position, equity position. It's priced so cheap and it's amazing inside. But that doesn't happen very often. That's like a gem, right? And I still look at them, most definitely. I'm looking at those. So if I go up here, I put a 1 in, let's get right to the home searches. Put a 1 in here. So I only want to see homes that came on the market recently. So if I'm looking at stuff that just came on the market, and I'll probably, so this is 1 day, right? So you got stuff that's, cheap stuff, okay? Now, I don't really look at this stuff. All right, I don't look at 100K stuff. Not because I'm too good for it or anything like that, but because I don't have the time for it. I just don't have the time for it, and it's not my market expertise. But that's why I would recommend, if you want to buy stuff in the 100K range in Houston and you want to be able to analyze it by the numbers using this system, that's why you would need to jump on here and get an account and start using it, right? But they're here. I mean, all price ranges are here. So generally, this is not what I would work with. So what I would do And so this video is about finding deals. So not cheap deals. Sorry guys. I'm not trying to find flips. All right. I mean, if I find flips, I'm going to mention it. If there's a flip here, I'm going to talk about it. You got it, most definitely. But I'm not going to focus on under like dirt value homes that practically need to be knocked down. Like what I'm looking for is mostly the good deal column type of property. So turnkey stuff or things that are priced extremely well with an arbitrage position that just needs some TLC. So those are the type of properties that I'm looking for. And so just, you know, that's my niche. That's what I do. So let's narrow it down to a market area. So I'm going to put in area 16 first. So we're going to shoot straight to the central region, as you can see here on the map. So we're looking at central Houston, which, as you know, in this area, we're talking about Rice Military. We're talking about Montrose. We're talking about Upper Kirby, Greenway Plaza, Afton Oaks, Royden Oaks, River Oaks, Briar Hollow. That's what we're talking about here. So the most recent to come on the market since yesterday to today that actually came on the market. I'm not talking about like a house that went off the market because it couldn't sell, so they tried again and reprice it, and so they put it on the market. This is one that actually is on the market for the first time. And since we only have one, let's see what happens if I put two in there, if we get any more. Okay, so we got two here. So what I want to do is I want to look at each one real quick. So we got $999,000 list price home. It does have a rating of good deal, but no arbitrage opportunity. And interestingly, this one has both a good deal and an arbitrage indicator on it. So actually, this would be the better one. Let's click on that. And let me go to active. Okay, so click on it. All right. Now click on this one. All right, so now we're going to zoom in. Okay, we've got to take a look at the lot location. So when something has an arbitrage position and good deal, we want to check the lot location. This one is on Levitt Boulevard, which is nice because it's very close to the Cortland Place Promenade, as you can see here, which is a nice street with a median running through the middle. Very nice. However, it is essentially next to Westheimer, where there's a lot of parking issues. You see all the P's here. See a guy running over here. A lot of commercial in this region. And so they had to price efficiently to get a sale. And this is a major detractor of value. Major. Not just a little bit. There's no question about it. No question about it that this is bad. Okay? So, yeah, it has an arbitrage position and a good deal, but I would not move on that. This is an automatic forget about it. Okay? Do not move on this. It's attractive. $675,000 for this region for a home that is on a 2,400 square foot lot. That's respectable. Building size 2,130 square feet. That's a good size. We just saw that people want 2,100 square foot homes. We saw that. 3 bedrooms, 3.5 baths. That's a great bedroom bathroom ratio. Built in 2006, so it's going to be dated most likely. And it's not in the flood zone, so that's good. This one's newer, the next one down, 2018. So this one's not an arbitrage opportunity, but you may not be necessarily looking for something that needs TLC or that is handicapped by its position in the map, right? So location, remember that was one of the things I pointed out earlier. Price, condition, location. Location is bad. Price is good. I don't know about condition because we haven't looked at it yet, but price is bad. So let's look at the next one. We have, it's no arbitrage, but that's not what makes it for me. Let's look at 1535 Michigan Street, asking just shy of $1 million, 999,000. So we're going to zoom into it. We want to see where it's at. So the problem with this one is it's located right across the street from Baker Montessori School. Fortunately, it's not necessarily a bad position. As we can see, the parking lot for this school is on this street, so it's not on Yupon. And then we have another parking lot here at Windsor. So this one, although it is across the street from Baker Montessori, it is not in front of a busy parking lot, and not likely to have cars wrapping around. Most likely that's to occur this direction on Windsor Street, or perhaps this direction, or perhaps this direction. But Yupon most likely is going to be clear of any traffic, of any cars waiting to pick up kids. The only downside is there's probably no parking on this side here. I'd say the upside is you have a nice park right here that could, is walking distance. You can walk to the park. So this could be a great solution for a family wanting a newer age home, 2018, wanting a 3-bedroom, 3.5 bath, and wanting to buy a house that seems or appears to be in a good position price-wise. So the building size is 3,100 square foot. So that's a lot more square footage than what we just looked at. So it's a larger home. So that means it's a 323 per square foot because it's at almost $1 million. So let's say that we are like, okay, well, this is on the good side of the school. Let's see if the numbers are good, right? So what we're going to do is I'm going to go to up here on lot size, and I'm going to limit my lot size. So that way I'm looking at only homes that are sitting on lots that are small or split lots. And I want to take it down to Montrose, by the way. We're looking at, okay, let's see here. Oh, Montrose. Yes, yes. Okay, Montrose. All right. So, yeah. So we have Montrose area, less than 2,500 square foot. And see, what we're seeing is that the median sale price is $673,000. So we can see why this price here for 420 Lovett is looking so attractive, because right there along the median, pretty close to it. And then this is way above it, okay, but let's take a look at what we get as far as the numbers of the home size, because we got to include the home size. And it's a large house. So this one is 3,100 square feet. So I have pre-calculated the plus and minus 10%. We got 2785 to 3403. Okay, so we got 8 sales. So when we look at the 8 sales, the median sale price for this home is $916,000. So for a home of this size on a small lot, a split lot, in the Montrose region, we get $916,000 as a median sale price. So we can see on the scatter plot right here, all 8 sales. The 8 sales are spread out, and that's why we want to know what the median is, so that purple dotted line that runs through the middle of the sales, that's a good estimate of value right there. Now, if you really like this home and you just got to have it, we would want to know how high we can go without breaking the bank per the market area. And so we want to know what that deviation, the standard deviation of sale prices in this area, what to expect standard deviation. What is the acceptable deviation of sale prices? And that's why we get this risk number called 9%. See that? So 9%, a lot better than 113%, but 9%. So with a risk of 9%, we wouldn't want to go much higher than 966. So that's what this number is, market value, right? So market value is anything with it that fits this criteria of a home that goes, up to 966. So if I was to, take my client to see this, and they want to put an offer, I would say we need to shoot for nothing more than 966. This house is not really a good deal. It's overpriced, but it's within reason of getting a sale. So let's look at the figures for making an offer. So this dollar sign here will tell me calculations for making an offer. So if, let's say, there's no interest in this house, it just came on the market within the last day or two, so it's a little early. But let's say it's 2 weeks, 3 weeks in, 4 weeks in. We could make an offer that's along the median. That's going to be the $916,000, and by that point, sellers should probably just take that. Now, if there happens to be another offer, so let's say that there's another offer, and you want to make sure you submit a strong offer. It doesn't necessarily have to be above ask or anything like that. So we can come in at 990 on this, 990,464. I wouldn't do that immediately, even if there was another offer, because of this constraint, 966. So I'd still want to stick to that. So in terms of this number, that's called the market offer, 966. So that would supersede the retention offer. The retention offer applies if it's at or below this number. But since it's above, we're going to cross that out, and we're going to go in at 966. That'll be our offer pretty much no matter what. That would be our max offer price. If let's say we go in at 966 and the seller counter offers, and you're just like, well, I love the house, I feel like, you decide that a little emotionally. So like, I'm the analytics guy, I'm gonna tell you 966 is the number. Anything after that is emotional value, right? So I give you the hard numbers, I give you the actual values, 966, and if we have to go over, then we can. But I'm still going to protect you, and we have this other figure, which is a per square foot offer, and that one says 978,000. So if we have to negotiate, I would hold myself there, and that figure comes from over here, which is, if you were to buy a house on a per square foot basis, then 316, so they're asking 323, 316 would be that upper market value limit. So if we take that 316 and we base it on that, then that could be our absolute max approach, you see. And we can say 978,000 is our max. As long as we're paying value per square foot, we're in a safe space. We're at pretty much the most we can go for this house. So that is the approach to make that offer on this house. Is this the home that I would post as a curated deal? No, because it is overpriced. So that is what has come on the market. So we've gone through 2 houses so far, and if this house is a likable house, then that is the approach. 966, 978 max. But if it's been a month, we're going to go in at 916. So that's that house. Next house. So let's reset this, and let's go to area, and we're just looking at the areas that I work a lot of. Okay, so area 16 I work a lot of, and area 17. Okay, so I work a lot of area 17. So we've got 16 and 17 in here. 17 encompasses West University, Bel Air, Braeswood Place, Knollwood Village, Rice Museum District, those areas, okay? And there's a lot of floodplain in here. It's a highly risky place to buy anything. You got freeways going through here, main streets going through here. You cannot just willy-nilly buy a house. Lot location is primo. Okay, so you got to pay attention to that. I even have ERM sensors. I even have decibel sensors to get the volume. You got to be well equipped to know what you're getting. Okay, there's value that goes away that depletes from those situations. So looking at area 17, let's put in a 2 here and see what we got. So there's 7 listings. So because of that, I'm going to just go 1 because I don't want to have too many. I'm just going to look at the last day. So 6 listings. And I'm going to go right over to the map real fast and see what of these could be potential. Now this is Boulevard Oaks region here, which is north of Rice University. Okay, and so this region is fairly noisy. This is where Poe Elementary School is, which is a A-rated school. But I mean, this is a beautiful neighborhood. It's just there's a lot of road noise from 69. So that's kind of a iffy area. If we get down here, which is closer to Rice Village right here, these are going to be better alternatives. Now this one's right across from Rice University, so that's not going to be as good. This is a nearly $3 million house right here. But this one at $725,000 could be a opportunity. The only thing is that it's the lot size is small. Okay, so real quick, let's actually click on this one. This is 24-2 Quinby, and I'll show you some things to look out for. So at $725,000, asking price sounds really good. That's really tempting. You might even want to go look at it, but you should save your time. This is a 2-bedroom house, not ideal. Okay, not ideal. Not for any circumstance is a 2-bedroom house ideal. Don't buy a 2-bedroom house, period. This is 1940 construction. It's got 1.5 bath. So it's not going to be move-in ready. It's not turnkey. That's not going to happen. The other thing is the lot size, 3,660 square feet. That's not ideal. Now, the subdivision says West Houston. Let's see if that's actually in my subdivision database. West Houston. Okay, let's click on that. So that takes us down to just West Houston. Now, here's the thing. When you get into West University Place and Rice Museum District, the subdivisions are super tiny, so they don't really help us much. But we can get a gauge of the subdivision itself. So take a look here. That West Houston subdivision, which is this little region. Let me zoom in here. So West Houston subdivision is only going to be a couple of streets. It's going to be like maybe right here, maybe only this block even. Okay, so it's 60 houses, so it's going to be like maybe 4 blocks. Okay. So we have 60 houses. The median age is 1983. I say average actually. So these numbers are average. So when we're looking at West Houston, we're looking at a 3-bedroom house with 3 bathroom, 2,254 square foot on a 6,000 square foot lot, built in the early 80s. Okay. So what do we see? Well, we see a house down here. This is the information about this house. So when I put it in there, it shows up here. So there's immediately red flags here. A 2-bedroom house is not 3. A 1.5 bath home is not 3. Okay. It's pretty similar in size, 2,150 square feet versus 2,254 square feet. The lot size is nearly half that of a regular lot in this subdivision. Not good. The home is from 1940, drastically older than what the average home age is in this subdivision. So this is a home that is not marketable. Let's just be frank about it. This home is not marketable. So that means this home is a tear down. It's a tear down. But can you even tear it down? Not really, because a lot size is not a 6,000 square foot lot. So it's not even worth it to buy it, to tear it down, to build a house on it. This is a house that doesn't fit the mold of the subdivision. You should not buy this house. Even if it's $500K, forget about it. Check this out. West Houston has a list rate of 10%. So out of 100 homes, 10 come for sale. Actually, let's say there's 60 homes. So out of the 60 homes, over the last 12 months, 6 came for sale. That means that on average, one every other month comes available for sale in this subdivision. That's not really that rare. It seems like you can hold the brakes on a house and wait 1 or 2 months later to see a new listing in the same subdivision. And while you have a list rate of 10%, the sale rate is very low. It's only 1.67. So West Houston is not a popular subdivision within the West University market area. Or actually Rice Museum District, actually. That's what it is. So Rice Museum is this region, and West U is on the other side of Kirby. Okay, so high list rate, so properties come on the market here often, but low sale rate. They don't sell that often. Not a good combination. So number one, house doesn't fit the mold of the neighborhood. Not good. High list rate, low sale rate. This house is a no. Forget about it. We're not even going to touch it. Okay, so that's how we look at that. All right, so now let me take out West Houston. Let's go back to the 6 options. We've got $790,000 home on 1918 Canterbury. So this one is in a subdivision. Let's take a look at that. Devonshire Place. What does Devonshire Place look like? Do we have that one? Looks like we do. Devonshire Place there. So we've only got one sale. Okay, so again, we're going to have a low list rate, 1.11% sale rate, high list rate, almost 10% as we just saw. What you can expect to get in this subdivision is a 3-bed, 3-bath, 2,472 square foot on a small lot, 3,390 square feet, built in the 90s. And there's 90 total homes there, but only one sale in the last 6 months. That is weak. A low sale rate, a high list rate, I don't like it. This house is on a big lot. Definitely can appreciate that. Bigger lots are better, and it's more in line of what Houston is desirable. The home is 1944, 3 bedrooms, 2.5 baths. So large lot. I wish I had an extra full bath, but it's got at least a half, so I can work with that. But it's in an area that doesn't sell very well. This one that did sell, which was $620,000, took 95 days to sell, and they're asking $790,000 for this one. So I'd just say forget about this one too. So let's take out Devonshire Place, and let's look at what else we have here. We have South Boulevard. Let's unclick this. So generally, I stay away from this noisy region and try to stick to the sleepy neighborhood regions. Now here's a house. Let's see what we have here. All right, so lot location. It is sitting on Greenbrier Drive. No, it's not. It's one block away. Okay, that's good. We want to be at least a house away from a main thoroughfare like Greenbrier Drive. Greenbrier Drive is very busy. We are walking distance from Braeswood Park. That's nice. Okay, so cool. Can appreciate that. So let's see what this one is. We've got one here. They're asking $1.7 million for 2315 Marinille Street, or $411 per square foot on a large 10,500 square foot lot. Just came on the market, so 0 days on the market. The building size is 4,130 square feet, 4 bedrooms, 3.5 baths, built in 1939. So it's an older house, and I don't like older houses. I like the charm of them, but I'm not going to buy it. Okay. It is in the 0.2% chance per year to flood. 0.2% chance per year to flood. So it is in a special flood zone area. It's the percentage chance per year to flood is low enough. If it's under 1% chance per year, then it won't require flood insurance. So at 0.2%, the insurance is not required, but do know that it is in a special flood risk hazard area, which means if you do get an insurance on this for flood, which you might want to do, it may be on the expensive side due to that reason. So this one I've indicated as no arbitrage and no deal. That's, these are indicators from helicopter view. So if we were to zoom in, possibly it could be better. But it is older, 1939 for 1.7. I wouldn't even entertain it. So we don't even need to look at that. So now I'm going to jump out of area 17. One second. Okay, yeah. So I'm going to jump out of area 17. And then what I'm going to do is, let me see here, that it reset. All right. Yeah, and then I'm going to jump into area 9. Yeah. All right. Go area 9, which encompasses the heights. So I haven't really come across a smoking good deal yet. So let's go to 9. Oh, it's down here. And that's what I'm looking for. I'm looking for something that's just really good. We found one that was close, that $9.99, but it's not really a good deal. It's overpriced. We have to negotiate on that. I want to find one where we don't even have to negotiate. That's what I'm looking for. I'm looking for a diamond. And I do find them pretty much every day. So this is encompassing the Houston Heights area, okay? So I'm going to put in days available 1, and we're just going to look at what's just at the market. We can see that there is a slew of options. Looks like 9 of them. This one up here on the top left is a house that's right up on White Oak Bayou. It's in the floodplain. As you can see, flood area, 1% chance per year. A new construction home. So you might get, zealous as a buyer and think that's new construction, it's shiny, and it has bells and whistles, but it's in the 100-year floodplain, and you don't want to deal with that. They're asking $456,000, and it's on a small lot. We're not going to mess with that one, so that's a no-go. And for me, I operate by telling you yes and no. You send me a property, I'm going to be like, forget it. If it's in the 100-year floodplain, I'm going to be like, nope, just forget about it. I know it looks pretty, but just forget about it. So what do we have? What's a good option? Well, here's something in Timber Grove. Timber Grove is a satisfactory area, most definitely. Timber Grove is great, all right? It is a good area. This one is 1834 Millwood Drive. Doesn't have any really an arbitrage opportunity, but by chance may have a good deal. All right, so let's take a look at this one. They're asking $525,000, and they're asking $328 per square foot. on a lot that's 7,150 square foot, so a good sized lot. Just hit the market. 1,602 square foot home size, 3 bedrooms, 2 baths, built in 1957, not in the flood zone, so we're all safe there. So let's look at subdivision Timber Grove. Let's see how this sizes up. Timber Grove. Timber Grove. Timber Grove, Lazy Brook. Oh, this is Lazy Brook, actually. Lazy Brook. Lazy Brook subdivision. Okay, so Lazy Brook subdivision. So this subdivision has a much lower list rate than what we just saw, 4.3%. So they don't come on that often. There's 669 available. I want to say available. There's 669 houses in that subdivision, built around 1960. So they're older, very much older. They're single-story ranch homes. About 1,818 square foot in size on 7,600 square foot lots, 3 bedroom, 2 bath. So they list at 4.3%, and included with that list rate is a sale rate, which is about 2%. So, sale rates usually lower than list rates, most definitely. So we want to pay attention to this list rate here. But at 4.3%, it just means that not hardly anything much comes on the market. Four out of 100 houses will come on the market in 12 months. This is a 12-month figure, by the way. So this house is, let's see how it matches up and see if it's a house that you should buy given the criteria of that subdivision. So you have 3 bedrooms that are, which is proper, 3 bedrooms here. We have 2 baths, that's proper. We've got a home size of 1,600 square feet. That's not proper. We're talking about 200 square foot difference here. So it's small. The lot size is, 7,150, and you should be getting a lot around 7,670 square foot. So it's smaller. Okay, so based on this information, we should be getting, we should be conservative. We should be conservative with buying this house. It's not always about buying the house because it's the only one available or something like that. But we have to have a good exit strategy. So that's selling or renting. That's why we want the house to conform as much as possible, or even excel on what the neighborhood has to offer anybody that wants to move there. Okay, so 1834 Millwood, 1834 Millwood Drive. All right, how does this one measure up? What's out of the flood zone, so that's good. From 13 sales, the median sale price is $850,000. Wowzers! That's all I got to say about that. That's crazy, right? So let's narrow it down to, let's see if we can get maybe down to 8 to 10 sales. We can see, by the way, that people that are transacting for a home in Lazy Brook at $850,000, not taking long, 13 days to sell in Lazy Brook, so not long. But people that are paying that kind of money are buying homes that are this size, 2,268 square foot, almost 2,300 square foot, which is a lot bigger than 1,600, okay? A lot bigger. They're buying homes that are 1961. The sale prices have gone up 26% from last year. That's humongous. Sellers are getting close to full price, as you can see here. And at $525,000 list price, we have a negative exposure. And I told you we want to see that. And that's because it's priced way below the median sale price. So that's good. We want to see that. We don't have a pending rate because nothing's under contract. There's nothing under contract because there's no inventory. And with 13 sales in Lazy Brook, but only 1 active, we have one of the lowest levels of inventory for any subdivision, 0.46 months. That's half a month. That's 2 weeks. That's 13 days. So this should sell given the volume of 13 sales, it should sell within 2 weeks, even though it's 1,600 square foot. So there's a price for everything. There's a price for everything. We got to see if 525, maybe that's the price for 1,600 in this region. Now, ideally, you don't want to buy it, but you also might not want to pay $850 for the ideal house, right? So let's make sure that we're buying it for the right price. If it's a small house, it should be smaller price, right? That makes sense. So how do we do that? Well, let's narrow it down by home size. So let's go home size 1762. So we're going to go within about a 10% range. 1762. Pardon me, that's not correct. Let's get that back. 1442. 1442 to 1762. I did it backwards. So that gets us 2 sales. That's not good. We need a little bit more. So let's round up to 1,800 here. Let's round down to 1,400 there. See if that helps. Okay, that gives us 3 sales. Would like maybe a couple more. Let's go 1,350 to 1,850. See if that helps at all. Let's go 270 days. So let's add 3 more months in there. Okay, so we've got 4 sales, and it looks like they're right around this 475 to 500. All right, so we got a 500 mark here because the 2-bedroom don't really count that too much. But if we look in this scatter plot, we can see 500 is about right with a max of 545. So given that we have a sale here and we have a sale here, we can expect a reasonable value of 530 on market value. So they're asking 525,000. So for a smaller size home, 1,350 to 1,850 max. So that smaller size home range in the Lazy Brook subdivision, market value, I want to save you cushion. I want you to pay $545,000 like this, but give you a little bit of cushion, $530,000. So taking size into consideration and the subdivision itself, $530,000 would be what I would try to not go past. Now that's a very important number. So let's say they just hit the market, right? So within a day. So let's say you're like, okay, I like that house. I want to be in that region. It's a small house. That's okay for us. We're just a couple. We just got married, whatever your situation is, right? But let's say this fits you like a glove. It's entry level. It's fine. Location, inner loop, near heights, all that stuff. You're like, good, perfect, fine, great. It's priced fine. So this is actually going to be a curated deal. This is one, as you can see here, deal, good deal. So this is a good deal. So I'm going to write this down. So I'm going to write this down as a good deal. This is 1834, and this will go on as my curated deals on my website. 1834 Millwood Drive. So what's our approach? So let's say you DM me right now, and you're like, Justin, that house would work for me. I want to see it. And because, I'm so educated in the market, I feel safe with you. I want to use you as my agent. Perfect. Great. Let's do it. 1834 Millwood Drive. Let's go see it. So then we go tomorrow. We'll go take a look at it. You like it, or at least like it enough to be, 90% of the way there to where you're like, let's put an offer in. So you say, okay, what do we offer? They're asking $525. So what's our approach? So that's where we have the dollar sign, right? So we click on that. So the dollar sign tells us what to offer. Let's say, it's one day on the market. So we can't really expect to go median offer $475, even though that would be a very fair price. That would be a price that would give you cushion from a downturn on the market, but would also give you some market upside for an increase in market value from year to year. So we want that cushion if possible, but being 1 day in, realistically, a seller is not going to entertain 50,000 under asking. That's 90% of ask price. And as we can see here, let's jump up to here. Those 4 homes that closed, they sold for a 102.3% of ask price right there. So they actually went above list price. Those houses right there that we're using as comps, those sold for over ask. So that means that they undervalued their homes. Buyers came in and paid over asking price. So 475 is extremely unrealistic, okay? Not going to happen, especially 1 day in. Maybe maybe a couple months in, different situation. But right now, no. So they're asking 525. What do we do? Well, we have a retention figure here at 537. Well, look at that. The retention offer is higher. That's because homes sell for above ask here. So we use that number, that retention offer. We will use that number if we have to go over asking price. There's multiple offers, 5 offers, 6 offers. We're going to have to go up to 537. 537. That would be a good offer to put in if we have a multiple offer situation, like 2, 3 offers. If there's only one other offer to compete with, only one other offer, there's one offer comes in, that's all, we have one other person to compete with, then we can do the market offer, 530. That will ensure that we get this under contract. We could go in at list price, and that could do it. That could be the exactly what they want, the list price, and they've got it. But if we get some intel and they say, well, the other people, they're already at list price, so then we can be okay, let's go 5K over. So that's where the 530 would come in. Now let's say you just got to have this house. It's an amazing house, and there's 10 offers. Okay, well, there's still a cap. There's still a cap, and the absolute max cap is 559, 639, and that's based on a per square foot valuation. So we have figures to go off of for the circumstance of the situation, right? So those, we stick to those and we'll be in good shape. So I wrote that down as a real prospect, 1834 Millwood Drive. So that has a market upside of $5,400. I'm gonna write that down, $5,400 market upside. Okay, great. Let's take it back to 180 days and let's move on to the next one. Let's take out Lazy Brook. All right, so we've got our 9 actives here. So that was one of them. That was a good one. Cottage Grove could be a good opportunity for you. This one in the middle is nestled away from noisy roads and railroads and stuff, so that's actually really good. And then we have this one, which I would stay away from because the lot location is right next to, is that TC Jester. Very noisy, a lot of traffic, you got some railroad noise and whatnot. Yeah, that's not good. But this one could be. It is in the 500-year floodplain, but does not require flood insurance. 2310 Arabelle Street, asking $500,000. And from my numbers, we have an arbitrage potential and a good deal. So this one could be even better. Let's take a look. This is in the Cottage Grove market area at the subdivision called Contemporary Park. Now we're going to gauge off of the market area more like, because there's just so many little niche subdivisions in here that a subdivision analysis is not really going to help us a whole lot. So let's just see what the market bears for buyers in the Cottage Grove area. So I'm going to go up here to Cottage Grove. I'm going to type that in, Cottage Grove. All right, and I'm going to click on solds here. So we can see it's this region right here. We can see it's in the scatter plot, all the sales as well. All right, so we got your 2-bedroom, 3-bedroom, 4-bedroom, 5-bedroom. Okay, so what we're going to do now is we actually have a 435, even cheaper with an arbitrage opportunity. Very interesting. So we have two options. And since well, let's take a look at the cheap one first. So 435, let's click on it. Oh, that's probably the other one, isn't it? That is the one that's on the road noise, isn't it? That's the road noise one. Yeah. No. So we're not going to do that. No, we're not going to do that. We don't want to do the road noise one. Okay, that just tricked myself. We're going to stick to this one. That's in a better lot location. I know cheap sounds great, 435, but it's not. We want to stay away from that. So looking at 2310 Arabelle only as a potential opportunity, they're asking $219 per square foot, 1,856 square foot lot, just hit the market within the last day. It's nearly 2,300 square foot in size, so that's a good size. A 3-bedroom, 3.5 baths, so it's a good bedroom-bathroom ratio. Built in 2006, so nearly 20 years old, and in the 500-year floodplain. Fortunately, this house is zoned to Memorial Elementary, Hogg Middle, and Waltrip High School. Waltrip sucks, but Memorial is a prize. Okay, Memorial is a prize. So good size home, very good size home. Let's see, 51 sales in Cottage Grove. Actually, let's make sure we're looking at small lot sizes. This is a lot size 1856. Let's put 2,000 maximum lot size, and let's see what the numbers look like. Okay, so now those numbers are coming out different, right? So 2,000 square foot lot size or smaller, 491,000 median sale price. It's priced there along the median, so that's actually a very good thing. It's priced in the middle. See here, 491. It's in the middle. So we want to see sale prices all around it. That's perfect. It's within the market. Perfect. 224 per square foot. 57 days to get a contract. This one's early, 1 day in, right? So it takes about 6 months to sell a house here that's on a 2,000 square foot lot, a 2,000 or less square foot lot. Home sizes that people are buying are 2,139 square feet, so this is on the larger side. That's good. Built in 2013, so that's not good because this home is older, 2006. Year-over-year sale prices have come down 4%, so that means that if you had bought a home like this last year, you would have lost 4% in market value. So could be a buying opportunity for you. Buy on the dip. Homes are selling for 97.7% of the list price, so we have negotiating room. 18% risk, high risk. Exposure is 10%, so they're asking $500,000 when things sell for $491. So we have risky situation here. Pending rate is blank because of the 2 availables. We're only looking at 2 availables. We don't have any actives. If I want to look at the entire region of Cottage Grove pending rate, that will mean a little bit more. So, yeah, because it's 2,000 square feet, we only got 2 actives, so there's not a very large market, but there is a lot of sales. 21 sales, only 2 actives, so that's something to consider. Keep in mind, a lot of sales, only a couple actives, not a whole lot of choices. So, okay, so what do we do now? We're going to go home size. So let's go for a similar home, similar home size, 2,053 square feet to 2,509 square feet. Gosh. Okay. I'm just trying to check my phone here because I get alerts. Okay. So a similar size home, similar lot size, similar home size, 13 sales, $491,000. 2017 year built. Let's make sure we're looking at homes that are on the older side. Let's say 2012 max. 5 sales. Okay. So that's important because a 2006 cannot compare to a 2017. I'm telling you, like they're not as open. The ceilings aren't as high. There's not as many windows. It's a big difference. So let's keep it 2012 max. So similar age, similar home size, similar lot size. This home is actually overpriced. They're asking $499,000 for this home. But market value on this home allows us to stretch to $466,000. So even though the median sale price is $430,000, if it is turnkey, already looks amazing, looks great for this criteria of home, so your top-notch home, market value tells me not to go more than $466,000. So if you like it, what do we offer? Go to the dollar signs, click it. So based on the previous 6 months of sales, to buy 2310 Arabelle Street, got a good location, not require flood insurance because it's in the X500 zone. It's well insulated from noisy streets and railroads and highways, and walking distance to the park that's nearby. So this one is like, okay, I like this house, good size, 3 bedrooms, 3.5 baths. It's on the older side, don't like that too much, but for my budget, for my needs, this home's good, right? So you're like, okay, I'm ready to pull the trigger on this. They're asking $499,000. It's too much. We're going to go in. They're most likely not going to have any offers because it's priced high, and it's 2006. People are going to turn the other cheek on this one. But you're okay with it. You're good with the 9-foot ceilings, whatever. The slate tile, whatever, you're good with that, but it's clean, it works, it checks the boxes, it's in your budget, it's where you want to be, it's zoned grade schools, yada yada. So what we're going to go in at $499,000, we're going to go in at $430,000. We're going to go in with the median offer, $430,000. It's only one day on the market, but I have no fear that it's going to sell under our feet. If I come in at $430,000, it's going to start to set that expectation for that seller that they're priced way too high. $466,000 is the number not to go higher, but that's one I want to stay away from because we're on the 2006 older side, almost 20 years old. We can go to $466,000. If we go to this house and it just impresses and hits the spot for you, $466,000, we can do that and we'll still be safe. That is our upper limit based on the risk of the sale, based on the distribution of the sale prices, the variation of the sale prices. $466,000 is the number maximum. Okay, so that's something for you to keep in mind. This is how we make that approach. But I would go in at $430,000 and set the record straight. Okay. All right, so that is area 9. I think there's one more I wanted to cover on this. So let's go back. Go area 9, and this will be the last one. And then we're going to sign off. Okay. Thank you for participating, for joining, for checking us out, checking me out, looking at what I do, how my approach to real estate, how it makes more of a clear picture and gives you the proper guidance. So this house over here is $385,000. That's actually cheap. That is cheap, okay? Decent lot size, 2,848 square feet, but look at the building square foot, 672. So that is a home that's a tear down on a small lot for $385,000. Forget about it. It's also right on North Main Street and right along the frontage road. Forget about it. Totally bad. Don't want to touch that. The next one is, one second. Just have to write down a note. Okay. The next one is a home that's about 1.7 million, 5,000 square foot home, 3,600 square foot house, 5,000 square foot lot, 3,600 square foot house, 4 bedrooms, brand new construction, out of the floodplain. It's at 728 Raw Fallen Street. That actually could be a good opportunity. One thing I'll mention, real quick, this is not in the historic in a historic area. So these are not going to be historically restricted properties, which is good because it means that newer construction homes will pop up all up in this region, and yours is a new construction home at 2025. So let me see, that's one I want to check out. Here's another one here in Woodland Heights. Okay, Woodland Heights is great. It's owned to Travis Elementary School. They're asking $1.78 million or 40 on a 4,550 square foot lot, 4,114 square foot house. That's a big house for that size lot. 2013 built in the 500-year floodplain, the 2120 White Oak Drive. That one is too close to the bayou, White Oak Bayou, too close to the roads, too close to noise. Forget about it. You're better off with this 1699, totally 100%. And then if you're looking for a good deal, this one might be it. It's a Lendale Park. Okay, this is not it. They're asking $1,250,000, and that's asinine for Lendale Park. Lendale Park is this entire region here. But just to, just to entertain you a little bit, let me just give you the numbers on Lendale Park real fast. Lendale Park, Houston. So Lendale Park has a 5.1% list rate. Not too bad. That seems to be normal. I don't know. But sell rate's really weak. So if you have a 5% list rate and only 1.35% sell rate, that sucks. And I should say that's the 1.35% is a 6-month sell rate. So let's go to 365. Okay, so see, it's 2.24% sell rate. It's half of the list rate. So it still sucks. Let's go back to 180. So it goes to 1.35. 5.1% list rate. Okay, so this Lendale Park is 3-bedroom, 2-bath houses. This is a 4-bedroom, 3-bath. Okay, that's better. Home sizes are 1,464 square feet. This one is 3,100 square feet. So it's double the size. We've got a lot size of 7,950 square foot. This is 7,950 square foot. There is 1,114 houses in Lendale Park. That's this entire region right there at 5%. So there's, 50 houses a year coming on the market there. So that's, 5 houses a month, something like that, 4 or 5 houses a month. So it's not a very competitive market. Not a very competitive market. And then they only sell at half as much the list rate. It's not very good. So $1,250,000. I mean, this is the list price here, and as you can see, the entire gauge is green. The max sell price was $815,000, or it's right here, $815,000. So this house is extremely over. And if I was going to buy a house here, if you wanted to buy a house and you say, Justin, I need you to lead me to buy a house in Central Region, I'm looking at Lendale Park, $594,000 is your limit. $594,000 is your limit based on the distribution of sales and based on the risk profile of this area. $594,000 is your limit for Lendale Park. And Lendale Park isn't even in the Heights, but it's approaching $600,000. Can you believe it? $1,250,000 is completely out of the question. Don't even think about it. But I wanted to point that out to you. I just wanted to point that out. Okay, so let's go back to that one house I really want to do, which is right here. Okay, because this one looks like a good opportunity at 728 Ralph Fallen Street. Let's find it here. 1.699. I'm going to click on it. All right, so we see it fills the gauges up here. It's expensive. Okay, it's expensive. That's fine. It's brand new, and it's obviously a lot better house than what you would normally get. So if I'm looking at the Heights, so let's go to the Heights. So first of all, let's go to the Heights. All right, so we've got the Heights in there. So 1.7 million, 472 square foot. Okay. So we're looking at the Heights. And what we want to do is we want to see for a newer age home. So let's go full-size lot. So let's go at least, let's see, this is a 5,000 square foot lot. So let's go 4,500 to 5,500. So there's 92 sales in the Heights that fit that criteria. Now let's do similar home size. Year built is probably going to be something we want to look at. Let's go to home size first. So home size is going to be 3242 up to 3962. All right, so we got 8 sales that fit the mold, and these are around 2017. So newer in age, we got 2017 here, and the values have gone up a lot. They've gone up 21%. So if you buy this house now, you'll be buying on a huge year-over-year increase in the market. So perhaps buying in this region, this kind of house, may be a stretch because of the huge jump in value right now. I mean, 21% is a lot, okay? So maybe you want to hold up a little bit. Nevertheless, if you were executing because you got to buy a house and you have your family situation, your personal finances, your personal situation, whatever that may be, it's different for everybody. But you love the house, you love the region, and as long as it fits the value for the area, you'll pull the trigger and go for it. And then, of course, I'm going to guide you on that. And I'm going to tell you that for a home like this, market value is anything up to $1,636,916. So we can call it $1,637,000. Okay. So if your approach to this house is just hit the market. So let's take a look at what the offer calculations are. So median offer is going to be way too low, right? $1,258,000. That's going to be definitely a 2017 house or older, but this is brand new, 2025. The retention offer says offer $1,642,000. So based on home sales selling for 96.6% of their list price right now, $1,642,000 is what you should offer. But that's a little higher than what the market value of $1,636,000 is. So we should go in with $1,636,000. Okay. Now, $1,636,000 is good. We can get it at that price and feel safe that it's going to appraise and that we got a reasonable deal, a fair deal, a good deal, a reasonable fair deal. If you have to go higher because there's other offers, I'm not going to tell you to go full price, but I will tell you what my system says. And it says you can go as much as $1,668,679. So $1,669,000. That is the number based on a per square foot value. We don't want to go higher than that. So we want to at least have our safety measures in place to make the approach on buying a house, and that's what these are. So, and to look at any of these pictures, we would simply just, I would simply copy the MLS number, and since this is the last house, let's go ahead and take a look. I'm going to go to har.com/Justin Braden, that's me, put in the MLS number, and we can take a look at the pictures. So here's the house. It's got a farmhouse look to it with the gable and the metal roof portico right here. The cute porch, large enough for table and chairs. But farmhouse looking home with a wood exterior and a metal roof as well as a shingle. Okay. So it's got a good curb presence. Looks like it's on a corner lot, so that makes sense. You got a magnolia tree in the front. That's great. Beautiful. Perfect, actually. Some very nice landscaping here. As soon as you walk in, you don't have stairs going right out the front door, but it turns, so that's good. You can see inside you got a more of a craftsman look with wood floors. I wish these were wrought iron railing. Instead, they went with the wood approach. Not a fan of that, but to each their own. We've got a lot of brass hardware. In my opinion, that's 5 years ago, but some people like the brass hardware. What's in now is mostly the black and champagne is kind of what's going on right now. So you got the rimless shower door. You got your wainscoting in the office with the glass French doors, encased windows, single hung windows, dual pane windows, energy efficient windows. We've got coffered ceilings in, looks like the dining room area. Beautiful. I love the coffered ceilings. I have that in my house. All right, we've got French doors going out to the side yard. And then it looks like we're getting into the kitchen where we're seeing some charcoal gray accent colors. So it darkens the space. I'm not a big fan of that. I'm good if it's got like light uppers and dark lowers or some mix like that, or some accents like that. But generally I want to have it light and bright and airy in the kitchen. That's just me. It just feels cleaner to me. But it's a nice horseshoe shaped kitchen with pendant lights. Looks like quartz countertops, something like that. Lots of cabinets. Nice sidebar. I love the fridge. It's a huge, humongous fridge, sub-zero fridge it looks like. So for 1.7, it's looking fairly palatable. Okay. I am curious to see this. I would try to make an open house or schedule a showing, but if there's an open house, go look at it, because you want to see the size of this living area. You want to have at least 20 to 22 feet of space one or the other direction, because you want a sectional that can float in there. So you need at least 20 feet one way or the other. Okay, like a 20 by 20 is ideal, but more than that is better. 21, 22. So you have flexibility with sofa placement, furniture arrangements. So we got high ceilings in the game room. So the game room's on the landing, so it's kind of like a loft style game room with built-ins. Okay, so you got pitch ceiling, so you got more like a cathedral ceiling inside of the primary bedroom. That's great. Love the high ceilings in there. Sinks are separated by a door. Some people like that, some people don't. They would rather have more countertop space, so that's like lacking of countertop space. And don't really see a vanity space. People do like the vanity space unless they could somehow put it in the closet. Then we'll see if that's the case. But you got a sizable rimless shower with a bench in there. Nice chevron tile work inside that goes all the way to the ceiling. Can certainly appreciate that. Walk-in closet with some standard basic built-in hanging rods and shelving. Freestanding tub. Some people like that. That's kind of a trending thing. I think I'd rather have a jetted tub. I like jetted tubs, especially with my kids. They love the jetted tubs. Ceiling that goes all the way to this, tile work that goes to the ceiling. That's great. So we still don't see a vanity, so there's not really a vanity anywhere. But they do have some built-in drawers, a dresser, which is nice in the master closet. Master closet does look a little small, I will say, and that could be a downer for you. You do have a nice folding station in the laundry area with a window and a sink. That's awesome. Got to appreciate the sink and the folding area. Secondary bathrooms look basic, but look nice. I like the arrangement of the tile work. It looks good. What else we got in here? Another secondary. Got a large covered back patio. Okay, that's good with ceiling fan. Backyard, enclosed, fenced in, decent. Okay, pretty house, asking 1.7. Here's an aerial view of it. Okay, so we have that's that side yard. So that's really what it is, more like a side yard, not a backyard. So the house abuts really right up to the property line with right up to the easement lines with the sidewalk. So that's nice on this side. And there's that magnolia tree. So that's very nice. So I like this. And you could schedule a tour with me just by clicking schedule a tour. Okay, so so that's looking at the market for February 24th, looking for opportunities. Found 1834 Millwood Drive as a great opportunity. That is a good opportunity. Okay. Thought we saw one on Cottage Grove, but it turned out to be overpriced. Not by a whole lot. It's at $499 ask price. Should be $466, right? So you could go in with an offer on that. But the best one that we saw today, that's inner loop, is 1834 Millwood Drive. Now the next video I'll do is I'll do another search through the market to find homes, but I'm going to look in a different region. We're going to pan over to the west side of town. We're going to look at the Memorial area. So make sure you subscribe and pay attention for the next video, so that way you can stay apprised of the residential real estate market in Houston and you know the best way to make the approach. Now, once again, I'm going to show you real quick before we sign off here. You go to realetix.com. I thought I was typing, but I'm not. Realetix.com, which will take you to this main page right here. Let's give you a description of our services, consultation services. Now, we do a la carte services. So if you just want a market valuation on a property because you're making an offer, you already have a realtor, you just need a good broker price opinion on a house that's based on numbers, we can do that for you. We don't charge a whole lot for that. It's $250, not a big deal, just to do a one time. And of course, that's going to make everything for you. That's going to be the basis of your negotiation, right? So it's very informative. It's well worth the money. So that's an option for you. We also do other consultation services, but that's the only one I can think of off the top of my head at this moment. So Realetix consultant services, we can do a la carte stuff for you that's already has an agent and just needs specific services. And we can do that with a quick turnaround, 24 hours, it'll be ready. Even less, possibly, maybe even same day if I get it early. If you want to just schedule a free consultation about the market because you're looking to buy, or you're an investor and you're looking for market knowledge and you want a good, comprehensive 1 to 2 hour market consultation where we look at the dashboard together, we bounce ideas around, we look for opportunities. Right here's a button to schedule a free consult. So you jump in there, it says book a consultation. I know it says realtors book an interview. Don't worry about that. Doesn't matter if you're a realtor or not. Just hit the book now, and then it'll take you to the calendar where you can schedule the next one. Tuesday, tomorrow. Pick your time, hit next. Easy, right? And then I'll get the notification, and we can do a virtual or we can do in person. My office is at Westheimer, 4200 Westheimer Road, which is in the River Oaks / Hillshire Village. I'm sorry, not Hillshire, Highland Village area. Okay, so that's how you get the consult. We can do the consult. If you want to follow me on Instagram, TikTok, YouTube, Facebook, LinkedIn, my links are right here to do that, so you can stay apprised of the market. What else can we do for you? If you are a realtor and you want to put this to use, real quick, if you're a realtor and you're watching this and you want to use this, you could do two things. You could join my team and have access to this software and access to like training and all the stuff you're going to need to make your business amazing. That's cool. We're with Compass. You'll be a Compass agent. So we are actually expanding the team. Or you can be an outside authorized user And as long as you're licensed, then you can use it outside. And that's right here, 200 accounts maximum. So we got to keep it competitive. Don't want to make it unlimited because I want to make sure that you're using something that's competitive. Okay, so I want to make sure that your competitive status in the market is secure. So that's why. So those are just some sales that I've done right here. And in the meantime, if you are an investor or a home buyer, and you want this, you want us to be your realtor, myself. This is my. You can hire us to be your agent, and this is our promise to you, our covenants of representation, our promises, our promise to you. So it's on realetix.com. And to just get started, it's really easy. You go to member plans, and you would click on the client plan. So this is for investors or non-licensed people right here. It's $150 a month for that. Does require a buyer representation agreement with my team because it's proprietary sales data. Can't just give it to anybody. But if you're working with us, then that's kind of the loophole, right? So you have to sign a buyer rep agreement with us to have this access, $150 a month. So that way you can use it on your own whenever you want in the same manner that I just did. If you are just a realtor that's outside of the team using it, it's right here, $100 a month. Every plan has a 7-day free trial, so you can do that. If you were to come onto the team and become a team member, that's $200 a month. But $200 a month, we have a whole team structure that's lead generation, BDRs, social media agent, cold callers, all sorts of stuff. I mean, it's a whole team setup. That's why it's $200 a month. It's well worth it. So those are your options. You can just sign up immediately. You don't even have to contact me. You don't even have to schedule a consultation. I recommend it because I want to show you how to use this stuff, but at least give you a good brief rundown. But if you're watching these videos, you got a good idea, just sign up. That's cool too. I do have to verify that you're licensed, and if you're not licensed, we have to make sure that you're authorized. All right, so that will happen within your 7-day free trial period, by the way. Okay, so thanks for tuning in. Hope this was helpful, and look forward to seeing you again real soon.